And we are live. Yes, hello guys. Welcome to today's session. Today we came in a little bit early compared to the time that we usually do. Yeah, because we wanted to cover this concept before we dive into another major concept later today around spot trading. So yeah, wherever you are, good morning, good afternoon, good evening, and welcome to this awesome session. So we're just going to dive deep into mastering technical and fundamental analysis, right? So whether you're just starting out as a trader, whether you're an experienced trader, whether you're an investor, this session is basically just meant to sharpen your market analysis skills and kind of give you the tools, right? Or rather equip you with the tools and insights that you need to navigate the financial markets with confidence, right? So yeah, to start us off, I will say in the world that you're living currently, right? It's very crucial to just understand as a trader both technical analysis and fundamental analysis. Technical analysis basically just relates to the study of price charts, trends, and indicators, right? And fundamental analysis from just a high level, right, involves just the evaluation of economic data, could be company financials, could be macroeconomic factors, right, in order to make informed decisions. And today we are here to just scratch a bit of the surface of the two. That's a technical and fundamental analysis, right? We'll cover key topics like maybe probably chart patterns, support and resistance, candlesticks, right? And time will lead us to what we need to cover during this session. So yeah, I hope you're ready for the session. You have your pen and paper. You have your laptop open, just so you can follow through with us as we go through the session. My name is Charles. I'll be your host, and joining me today is Mark Bryan. I'll let Mark introduce himself. Then we can dive into a quick presentation of just the topic of today. Yes, take away, Mark.
All right, thank you so much, Mr. Charles. Thank you for the opportunity. Good afternoon to everyone. Good afternoon, morning, and evening, depending on your location. My name is Mark Brain from Ghana. I'm a forex trader, a crypto trader as well, and then a Binance angel at the same time. As usual, we thank Binance for always making the platform available for us to reach you guys, to share knowledge with you, to increase adoption and crypto education. Now, we'll be going into fundamental and technical analysis. These are topics that I'm not sure we can finish talking about it. A lot of things go on where you need to know what is going to happen next in the market so you can be able to make decisions with it. And what is a fundamental analysis? What is technical analysis? Now, I will build it on it because we started something the last time regarding fundamental analysis and technical, where we even, those of you joined that time, we look at things you should take into consideration before you take analysis, where we look at the outlook of the market, the nature of the market, the direction and the trend of the market, where we talk a little bit about key levels, point of interest, area of value, fair value gaps, liquidity points. And then we also say that you need to refine and determine your entry. So at that day, that particular time, we actually have a trend that we forecasted on BTC USDT, and we may build on that. I'll just expand my chart a little. So maybe building on this particular setup, because one at a point is invalid on one side, on the other side is valid. But then when do you use technical analysis and fundamental analysis or both? Do you need it as a trader? At what point do you think technical analysis is necessary? At what point do you think fundamental analysis is also necessary? And these are the questions that we're going to give you an answer, then the approach to make the right choice. Now, before you be a trader, you are either an investor, which will say a position trader, or you are a trader, or both. Now, if you are a trader, you are a speculator. You are taking advantage of difference in prices. If you are an investor, you are holding the asset and then expecting the asset to increase in value for you to make profit. Now, you can be both a trader at the same time an investor. So if you're an investor, you might want to focus on fundamental analysis. If you are a trader, you will have to focus on both to enable you know exactly what is controlling the market at what point. So let's go into fundamental analysis. We'll start with fundamental analysis, and we'll be looking at the ability to evaluate the intrinsic value of a cryptocurrency project or a cryptocurrency or a project. Now, I refer to cryptocurrencies as projects. Why do I refer to cryptocurrencies as projects? I refer to them as projects because they are businesses and they are here to solve particular problem. So you need to check if the problems they are coming to solve are realistic. If those problems meet the expected demand of consumers. If it meets the expected demand of consumers, then you will know how you will go about it and then the decision you can make. So we'll look at project utility. So under project utility, we'll be looking at what problem does the crypto solve. Now, we'll definitely be talking about BNB. I will talk about BTC. So one key element that BNB is solving is the high gas fee issues from Ethereum. So if you want to invest or purchase BNB, the question is that, do you think it makes sense that a crypto project is solving high gas fee of another cryptocurrency? If yes, how do you think it will affect the growth of that particular cryptocurrency? This is a key fundamental information you need about the project. You also look at the team and partnerships. Who are these people behind the project? Are they real people showing their faces, which is a public verified crypto project, or it is other people who are or companies that are behind the project, which will be considering at the private verified crypto project. Now, if it is a public verified crypto project, what are the reputation of people behind the project? If it is private verified, which are companies backing up the project, what track record do you have for those companies? And we want to trust those companies at the end of the day. Now, if you get answers to this, then we are going to look at the tokenomics of the project. Now, before we go into tokenomics of the project, what do you think will happen if a project is launched and decide to partner with Binance? And Binance probably did their due diligence and realized that this project is good and they want to look into it. Now, depending on the answer you get, will determine the value proposition Binance is giving to that project and how people that trust Binance will believe in the project as well. So it's something you need to deliberate on before making a decision. Now, when we look into the tokenomics, which is more or less like the engine plan of a project, where we look into the supply, demand, the maximum supply, the burning mechanisms, inflations and deflations. What is the preparation plan towards the project. Now, if you go into the normal business we do, you need to have a business plan, the action plan, the marketing strategies, how you want to roll out your project, your target market. When you face issues, what are the things you will do to be able to make sure that your business meets the expected uh, demand at the end of the day. So if you take those things into consideration and you assess them, it helps you know which project you are putting yourself into, and then how you are going to make an investment, how long, and then equity measures are also put in place at the same time. So remember utility of the project, the team behind the project, and the partnerships, then the tokenomics. We then have the roadmap and development, where we look into upcoming updates. For example, I remember when Ethereum was introducing proof of stake, we all have high expectation since um, there was a lot of issue raised regarding the mining costs, environmental issues and stuff towards proof of work. So when Ethereum is going into proof of stake, it gives people a lot of hope, and then expecting that, okay, if we solve this proof of work issue, then maybe we don't have issues again and stuff like that. So you need to consider all those roadmap into a project, and these are all fundamental principles that governs that particular project. Now, if you are coming from a forex trading perspective, and we are talking about fundamental, the approach is not definitely going to be the same as the fundamental when it comes to crypto, because in the aspect of forex, we have governmental bodies. Even though some information will integrate a little, but then the purpose of reading fundamentals on forex and crypto will not be the same at the particular moment. So we also have to take note of that as well. You look at the community and adoption. The size of the community, the engagement of the people that trust the project, where you're looking into the project social media platforms and how people are reacting towards that, social sentiment, and then ecosystem growth. They are key things you need to look into to see how the project is actually going to become. Now, when you understand how the project will become, then you will know, okay, with this project, I think I'll put in some cool money at the end of the day. Now, at the same time, we have what we call the on-chain metrics that you need to look at. What we call the on-chain metrics, where you look at the active wallet addresses, transaction volumes, you look into network hash rate. That's especially for proof of work. You look at the staking data when you're looking at the proof of stake as well. So if you look into it, taking, let's say, Solana, for example, you see that a high-speed blockchain, low fees, a strong developer community as well. Then use cases, which is the decentralized finances, NFTs, and gaming. Then we also have evaluating its potential through ecosystem growth as well. So you need to consider all these things related to crypto project as far as fundamental analysis are concerned. Now, from the things I mentioned, we also have other things to look at, like, for example, geopolitical event that could affect that particular crypto you are considering. Geopolitical issues that could affect that particular project you're looking. We also have other rising issues like regulatory issues from one country to another, continent-based as well, to be able to know what will be happening in the market. So when you put all these together, we then bring that data to the technical aspect. And we are to infuse the fundamental into the technical. Why? Because if you are buying the project, as far as the project is not a rocket science that will just leave Earth to Mars, it will go through some curves or waves. Let me use the word, let me borrow the word waves. It goes through waves. So there's a layer of oscillation happening. So if there's a layer of oscillation happening, it means that you need to understand the swing nature. Are you making that decision based on previous data? So the technical approach and fundamental approach you will use when considering a new crypto project is not definitely going to be the same as the technical approach and fundamental approach of existing project. Let's say we are launching a coin tomorrow. A coin is fresh. It has no historical data. So you are only making decision based on the outlook of the website, the tokenomics, people behind the project. But when you're taking BNB into consideration, BNB some way somehow created some patterns in the past. So let me just bring up BNB. Yeah. So BNB already created some patterns in the past. So taking it from a period, let's say December 2024 till today, somebody will want to make a decision on BNB. The person will be like, okay, since price went as high as, let's say, 426, and then went maybe as low as 471, I'm actually expecting a reaction, and then I'm buying BNB at this particular price, and I'm holding to this particular price. That decision will not be the same as A coin, because the A coin has nothing to do with what? Previous data. But BNB has something to do with previous data. There is a structure that you can follow to be able to understand what BNB is doing against what it has done and will be doing. Right. Now, technical analysis. Is it complex? Is it simple? Is it easy? Will it give you accuracy? Is it something you can rely on 100%? Definitely, you cannot rely on technical analysis 100% because you are projecting. It's just like you project or predict that it will rain in your area, and you have some reserve waters in the barrel and you went to throw them away because you saw cloud formation. So a technical analysis can also look like that, where the conventionals you want to see might actually meet with whatever you want to see, but the expectations will not be the way you thought it would be. Now, we use technical analysis to forecast future price movement based on past market data. So it means that it is going to be easier for people to use technical analysis to analyze BTC now than some years back. So these are some of the things we will be looking at when it comes to technical analysis. So we'll be looking at key indicators that will help us understand technical analysis and the best approach. Now, my first indicator I use and I trust so much is the candlestick. Okay, so first is candlestick. That's my first indicator. You need to learn how to read candlestick. Now, what is candlestick? So we have different ways of seeing the chart, interpreting the chart. We have the candles depending on the platform you're using. So Over here, we have the candles, we have the bar. So if you want to look at the chart in a bar chart form, it will look something this way. Then we have the candles that look this way. That will be our main focus for today. We have the hologram. We have Fibonacci. We have the line chart. We have the area. We have baseline. We have Renko, line break, Kagi, and then point and figure. These are ways you can see the chart, and the concept that governs them are not the same. For example, baseline is different from area. Baseline is different from area, and then area is different from line. So there is a principle of analyzing the market that will work for someone using bar chart and might not work for someone using candle. For example, let me pick, when you look at the 528 downwards, according to line chart, it looks like price didn't go below that. Why? Because the line chart only gives you information based on opening and closing of price. But candles still give you information based on what? The week or the highest price went and the lowest price went. So you take note of the two. Now, if you want to be a candlestick trader, there are certain things you should have in mind. If you want to have a line chart trader, there are certain things you need to also understand. So I go with candlestick, and the types of candlesticks matters to enable you and help you make the best decision for yourself. Now, when I said the types of candlesticks, you should know the basic turning point candlesticks. You should know the basic communicating candlestick. You should know candlestick that tells you this is what will happen at this particular point and how it's going to happen, and you can follow it very well. Remember, candlestick alone cannot or might not be able to give you everything as far as technical analysis is concerned, but it can give you a clue to what market is doing. And if you're able to understand how to apply that principle to the chart and develop the right confluence to it or the right reason to enter the trade, it will play well for you. The next point we will be looking at is market structure. We also have the outlook of the market, the nature of the market. After that, you look at how to identify key areas like point of interest, area of value, areas or prices that you've seen a significant changes that applies over there. For example, let's say on our chart here, I have a line at 624, 623.9, 235, yeah. And then price went there like multiple times, but then did not react directly on that price. So I can consider this whole area as an area of value. Why? Because some way, somehow, there is a reason why I will be considering this area. I will be looking out for this area. Maybe, okay, the next time price cross this area and come back and did not close below it, I will be going for a bullish move. So that place, which is 623.925, is going to be an important area for me that I will be looking at to make a financial decision. Now, the style and approach will not be the same for everyone. So I will be seeing that place making a particular decision, and somebody is also making another decision. But then the end goal is how it works for me should be different. Now, we'll also be looking at indicators like momentum indicators. We'll be looking at relative strength index. They are all approaches you can use to make trade decisions as well. Now, with the relative strength index, it helps you identify overbought zones, oversold zones, and then how price is swinging in the market within that particular period. Now, when it comes to oscillators, we have different types of oscillators. We'll be taking into consideration convergence areas, divergence areas, and then its element. So if you pick a technical indicator, you should be able to identify that particular technical indicator and then the role it plays. It is very important because it will help you know what the market is doing. Then we have the MACD, which is moving average convergence divergence. Now, the moving average convergence divergence is also a trend identification at oscillator that goes with histograms. Now, when you take that particular tool, you also need to know how it works and be able to know how you are going to play it at the end of the day. We have moving averages. I think is one of the most common indicators. A lot of people know moving averages, but unfortunately, they don't know how to use it. We have different types of moving averages. The purpose, the parameters. So let's say you see somebody using moving average 50 on their chart. You need to ask, what type of moving average is it that you are using? So if the person is using moving average 50, we have it based on how it is applied to chart. Is it applying to the high? Is it applying to the low? Is it applying to the median price? Is it applying to open or close? Now, based on how it is applied, to tell you how it will work. So you also need to take advantage of that and understand that concept. Then we also have the volume indicators, which gives you confirmation of how price is moving as well. Now, when you understand the volume in the market, which is someone will say momentum, it will help you know when the market is going to make a major move, and then you can apply it. Now, I have my friend, which is Fibonacci retracement. It works for me a lot. So it helps you identify potential support areas and resistance areas. So if you understand maybe how to use that particular tool, if there is time, I'll demonstrate it. But then you can read on it because it gives you that sequential and mathematical approach to know exactly what is happening in the market, where retracements are possibly going to happen, discount areas, premium areas, key levels, potential support areas, demand areas as well. We also have what we call chart patterns. So you need to take into consideration chart patterns where we look at reversal patterns, we look at continuation patterns and other patterns, that anything you can watch as far as market is moving to help you make some kind of decision. Now, whatever decision you make, there is a reason for it. Maybe you are buying for a reason, and then you are taking profit at one particular point as well. So you need to know which indicators, which principles confirm that decision you are making. Now, when we come to patterns, we have the candlestick patterns. So one candlestick formation, which is how market represent price for you over here. Then we have candlestick patterns. Now the candlestick patterns, they are the group, a single, two or three or more candlestick that is giving you a reason to make a financial decision based on how a cluster of candlesticks are moving. Now, it could be one, so it could be two, it could be three. Yeah, I think the highest should be three. When with their communication or confirmation, will give you maybe 4 or 5. Now, if we're looking at, let's say, a Harami candlestick pattern, we could look at these two candlesticks here. We could look at these two candlesticks here. Technically, our formation, what it looks like a Harami, but technically it's not a Harami. But then a Harami is any candlestick that form this particular way, where the first candlestick is bigger than the second candlestick. So if the first candlestick is bigger than the second candlestick and did not close below 50% of the previous candlestick, like I circled, we can consider it as a Harami. Now, they are reversal candlestick pattern or a potential change in direction candlestick pattern. We have the opposite of that, which we'll consider as engulfing. So, for example, if you circle this one, these two here, you can see that the green one is smaller than the red one. So the red one swallowed the green one. We'll consider as engulfing candlestick pattern, which is also a reversal pattern or a change in direction pattern, confirming that the market is possibly going to change direction from a buy to a sell. Now, if this particular candlestick happened, depending on the strategy you are using and the structure the market give you, will tell you what decision you should make. So before you use any candlestick, there should be your validation reasons. There should be whatever that will endorse that, okay, you've seen an engulfing candlestick and this is an engulfing candlestick. We also have dark cloud covers. We have piercing lines. Now, dark cloud covers happen at the top, piercing line happened at the bottom. So if that happened, for example, when we take these two into consideration, we can see that the green candlestick closed above 50% of the red candlestick. So we can consider it as a piercing line, which is also a reversal from the bottom. If it happened at the top, you will see the second candlestick closing below 50% of the previous candlestick. That is also a dark cloud cover, a change in direction from the top as well. Then we have 3 or more candlestick patterns. We'll be looking at the morning star, the evening star. Now, crypto markets somehow is a little bit volatile. So you might not see all types of candlestick patterns forming. But then also depending on the type of the time frame you are using, will let you know the patterns and how they work. Now, before you go with the time frames you are using, you need to look at what type of trader you are. So this is the point we'll be looking at. Are you a scalper? Are you a day trader? Are you a swing trader? Or you are a position trader? Now, if you are a position trader, it means that you are making a decision on a bigger time frame. You want to hold trade for a couple of weeks, months, or years. If you are a swing trader, couple of days, weeks, maybe months. If you are a day trader, you are opening and closing trade within the same day. If you are a scalper, you are entering trade with yes, getting some few points going to your favor, and you are closing the trade. So these are some of the the types of trader you are, that will determine how you are going to look at patterns and the time frames you play with. Now, currently we are analyzing or we're using one day time frame for our analysis. Now, if you're using 1 day time frame and it's giving you all the confirmations and you're a futures trader, you may be looking at, okay, if that is the case, what is my equity? How long can I hold the trade for pullbacks? What is my target area? So you use all those details to confirm where the direction will be going and how you're going to approach the market. Now, when we come to technical and fundamental analysis in crypto, the focus also matters. For example, if you are looking at how long do you look into a project, definitely before you think of holding a project like 1 year, 2 years, 3 years, expecting it to give you 10x, 20x, 50x, 100x, and more, you need to understand that fundamental is the key factor before technical, because technical is more or less like a short-term price movement to help you know what is happening within a specific period of time. Even though you can use it to for the long-term goal, maybe let's say you've seen a rejection candle like a doji or a long-legged doji like this one, this very one here, a long-legged doji, that confirms to you that there is a rejection on a daily time frame. Now, if this confirms to you and you want to buy, how long are you buying? Yeah, from a candlestick perspective, it can give you that confirmation. A lot of technical, fundamental perspective. So if you are looking at technical perspective, maybe the following day, that's 10th, 9th April, 10, 11, 12, market goes in your favor. But the point is that based on your analysis, do you think it will get to this particular stage? If yes, then you are making that decision. If no, you are not making that decision. Now, if it's a technical analysis, depending on the type of trader you will be, is something that can actually help you within that short period for you to make your decision. So if you are a futures trader, the approach will definitely be different than a fundamental trader. So these are things that you need to carefully look at. Now, the data sources are also things you need to consider. For example, if you're looking at fundamental analysis, you're looking at project data, news, and metrics to help you make a decision. Technical analysis is based on price charts and indicators. What is market doing? Oscillators giving you convergence areas, divergence areas, reaction of price as well. Then the use cases also apply. Investment decisions for fundamental analysis. Then entry or exit timing trades for technical analysis. So if you know how to use it, then you'll be able to know how to apply it at the right time for it to give you the best decision. Then the time horizon. If you are doing fundamental, you are looking at the medium to long term. If you are doing technical, it could be short to medium term. Yeah, there are some times, as I said, depending on the type of trader you are, you could be looking into a longer time frame, a longer term of your investment with fundamental analysis, where you take other key points into consideration to help you make the right decision, the right forecast as well. Now, with all this, you will need to know what define your entry rules and exit rules. A lot of people are buying cryptos. They even don't know the price they bought it. If you go and ask them right now, at what price do you buy this particular asset? They don't have an answer for you. You are not a good trader. Now, if you know the entry price, then you should know exit price. So as a trader, fundamental, technical, you don't, I think one main point actually like people would actually relate to it borrowing. And that main point make people money and they are not sure where they will come out from the market. So they hold the profit, then later the market turn against, and then they are holding it, hoping. So right now they are hoping for that project to do magic. But that project actually gave them an opportunity to make good profits before. So these are some of the key points that you need to know as a trader. Now, fundamental data, you need some websites to understand news events, what the project owners are talking about, their expectations. The expectation can even go into revenues they are making, net profits, what people are saying about the project. We look into, like I said earlier, geopolitical events. They also play roles over here. If you are considering things like BTC USD or BTC USDT, you look into demand and supply on both sides and how it is playing with that particular asset. Now, if you take those data into consideration on a normal day, your decision making will be accurate. Right? Now, if you know your exit points and your entry points, you are already someone who know exactly what you are doing, right? You accept your losses, or if you are holding the project, you know how long you want to hold that project, you know what price you want to buy, you know what is helping you make that decision. And if you know all these, then automatically you will be able to apply the two principles very well. Now, you are on Binance platform using TradingView and you want to add any of these technical indicators. Let's see how they appear. So for instance, you come to technical indicator here, then you search for whichever technical indicator you are using or you want to use. So we have a lot of them here. So let's say you are looking at moving averages. So once I start moving average, you can see we have moving average adaptive, moving average double, moving average Hamming, moving average multiple, triple, moving average channel, moving average exponential, moving average weighted. These are all types of moving average. Now, you've seen someone using moving average and you are too proud to go and ask the person, what are the parameters of the moving average? You hear someone telling you that I'm using moving average 50. That is not all. For example, let's say we have moving average and moving average exponential. So when we click on it, it's loaded. We can then modify it a little. So let's say I want to modify it. We have the input, which the numbers here, we have the length, we have the source. So when we are using moving average, it gives you the opportunity to, how do you want to apply the moving average to the chart? What type of data do you want to derive from the moving average? Okay, default is saying that give me data according to how price or market closes within this particular time. And then another one is how price open. Another one is the highest price went, the lowest price went. And then other ways, average and the rest. Then how you want it to relate. So you need to know these things before you apply moving average to your chart. That's for moving average, and this is the line. Anytime you are using a moving average, you should have a predetermined color scheme for your moving average. Very, very important. Now let's look at one or two oscillators, and we take, let's say, moving average convergence divergence. So MACD, so full meaning of MACD is moving average convergence and divergence. Now it gives you a histogram, then put semi-potential direction of the market on the oscillation basis with a signal line, which is a crossover line as well. Now it is also your responsibility to know what parameters align with it. So when you come to settings, on default, it has fast length 12, slow length 26, the source is close, the signal length is 9. Depending on the trading concept and profile and model you use, will determine the details you are going to put here. So if someone says I'm using MACD, don't just go and jump and put MACD on your chart. You will lose money, or the way it will work for the person, it might not work for you as well. Now, people will ask, do moving averages work? I will say yes. People will always say it does not work because they feel it lags. Yes, moving averages are lagging indicators. So when we come to indicators, we have leading indicators, we have lagging indicators, and we have the hawkish indicators. We have different types of indicators. So if you know the moving average or the type of indicator you are using, it's, let's say, a lagging indicator, then means that you're going to apply your principles the lagging way, right? If you know it's a leading indicator, then you're going to use it that way. So the point is that you try to know what indicator you are using, what goes into that indicator, so you'll be able to use it properly. Now, there are some indicators that you might want to combine it with other indicators. Maybe moving average is a trend indicator, and then MACD, which is moving average, convergence, divergence, is a oscillator indicator, giving you the swing nature of the market. Maybe you are supposed to combine them for them to work for you. Now, somebody will ask, what works for me? So what works for me is price action. That is what normally works for me, taking into consideration demand and supply, right? Now, if I'm taking into demand and supply, I'm looking at what is actually creating the demand. For instance, a lot of people will say, um, fundamentally, we are in a bull run, right? Normally, when Bitcoin halving is approaching, you hear a lot of people saying that they are in bull run. Now, the question is that what demand? Will the bull run create demand, or it will create supply? Answer these questions first before you go and buy a project expecting when the bull run is coming and the rest. Understand the swing nature market is creating as well, to let you know how you are going to handle this whole technical and fundamental analysis in the market. Now, if you put all this together, if remember, it's not a financial advice. I'm not a financial advisor, so don't take anything I said as financial advice. You definitely need to do your own research, all right? Develop risk management approaches like dollar cost averaging, understand your martingale, your hedging strategies before you go into some of these things. Now, depending on where you are applying the principle, will let you know the rules that governs it. If you are trading futures, remember to use stop loss and take profit. And reference point is always academy.binance.com. To ask any questions, search for more tutorials, things you need to understand for the market to treat you well. Remember, when you treat it well, it will definitely treat you well. So if you have questions, clarifications, you can join the Perspective Telegram groups. If you are in East Africa, join the East Africa community. West Africa, join the West Africa. Thank you so much for your time. I'm handing over to Mr. Charles.
Yes. Hey, Mark, yeah, thank you for that. Yeah, we barely scratched the surface of this conversation, and I'd love to encourage you, if you're listening, so to learn more about this technical and also fundamental analysis, you can join our crypto school, which happens each and every Saturday, yeah, from 1 p.m. From 10 a.m. UTC, 1 p.m. EAT. Yeah, so join in, listen in, just learn about technical analysis, because technical and fundamental, sorry, analysis, because these are the tools that you need in order to just be probably a creme de la creme in this space, right? Because we all know that the market is a puzzle, but yeah, with the right tools, with the right strategies, with the right yeah, risk management, right? You can just clearly see the full picture of the market. So whether you rely on charts, whether you rely on economic data, whether you rely on both of them, the key I usually say is just discipline, right? Discipline in risk management, discipline in your strategies, right? And just consistency and continuous learning each and every day. That's why we do have these sessions each and every time, just to equip you with the right tools that can help you in your trading journey. Yeah, in order to be profitable, right? So yeah, with that, I'd love to thank Mark, our incredible speaker, for sharing his expertise and just for engaging us through the session. So if you have a question, feel free to leave it on TG, our Telegram. If you haven't joined any of our Telegram, yeah, just navigate to Telegram, search Binance West Africa, Binance East Africa, Binance Tanzania, Binance Uganda. I'm pretty sure if you're listening in, we have a TG group that is related to your country, right? So yeah, with that, I think we've come to the end of this session. If you want to learn more, you can join our crypto school. Just yeah, send a message to us on our Telegram. We'll send you the link to sign up for crypto school. Yeah, and we'll also be having at least one monthly session just on technical and fundamental analysis problem moving forward. So yeah, with that, I'd love to close the session for today. Do have a lovely day, evening, afternoon, wherever you are. And let's catch up. Actually, today we have another session from 3 p.m. UTC, 6 p.m. EAT, where we'll be diving deep into just spot trading. This is basically just a Q&A for a campaign that we have launched on spot trading, to be specific, spot copy trading. So I'd love to see you all in the session later this evening. Yeah, learn about the campaign, participate in the campaign in order just to unlock a reward or rather an incentive. So let's catch up in the evening. So do have a nice time wherever you are. Bye.